Good morning and welcome to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. And for this edition, we're going to focus on charitable gift giving for holiday 2017. And joining me is Irv Rosenzweig. He is the president of RZ Wealth to help us work through this process. Irv, as always, thank you for joining me at MarketSite. And are there certain precautions that you need to take before gifting to charity that not only benefits the organization itself, but the people it's supposed to go to?
Well, again, it has to be a qualified charity. So, there is a list that you can check with the IRS. Generally, they have to be Section 501c3 of the Internal Revenue Code. Mm-hmm. So they have to be a legit charity in that sense. Otherwise, you're not going to be able to claim a deduction. And again, before you give money to anybody or anything, you want to take a look at your budget and get a sense of your cash flow and if it's something that you can truly afford to do. I mean, everybody has a sentiment of giving, but is this something that's really right for you to do at this point in time?
Is there a percentage that you would recommend, 1 to 5% of your income, or is it really based on your own values and what you do have disposable?
It's really dependent on many things. But again, the hard part is for people to develop a cash flow analysis, develop a budget, see what they're spending, see what they need, figure out what their intentions are, and then from there, sure, if there is the ability to give in donation. If you can't give in donation and you still have a cause, volunteer, in that sense. So that works as well.
I do the same thing too. I give to so many different animal charities, ASPCA and all the local humane societies by me, and you look at it month after month and you realize how much money you're putting out there. And I started volunteering myself just to give back in other ways besides money, and that's such a great point that you make. But what's the best payment method to send? And do you think texting donations is safe? I get that a lot, and I'm pretty leery of texting.
There's a lot, and frankly, they're calling it texting, but essentially what's happening is that, yes, you can text the fact that you're going to make a charitable donation, but it doesn't count as a charitable donation until it's debited either from your phone account or from the PayPal associated with the phone. So what you're really talking about is an electronic payment method relative to fulfilling that donation, because again, that donation has to be realized, almost like a capital loss has to be realized. It has to be fulfilled, and the charity has to receive it in one shape or form for it to count relative to a deduction. But yeah, it is safe. I think it's a misnomer. It's really more of an electronic payment system. You can text your acknowledgement, but they're going to debit your PayPal or something like that.
Right. Okay. So I see a lot of tax exempt and tax deductible. What are the differences with the two?
Okay. Well, tax exempt would really apply to more of an investment strategy where you're buying either municipal bonds, getting tax exempt interest in that sense. Also, you have the ability. I wrote a paper a long time ago called 3D Diversification. I wrote it for one of financial planning magazines, and really, where you're at with tax exempt is the ability that you have with non-qualified money, where with non-qualified money, you can take out money. It could be your principal, because you could do lot selling. That would be tax exempt because it's a return of your principal. The other side of that, tax deductible, would be the ability to donate to a charity and have that coming off of not only capital gains, which is what capital losses do, but also off of ordinary income, and that would be the difference. That it's something actually coming off of your taxes that relates to ordinary income, rather than something that's not affecting your taxes, like interest income, being the tax exempt type of investment.
Right. So that's like you were saying before, almost like your 401k, for example. So when you put money into that, that's tax exempt. But when you make the charitable donation,
tax deferred.
Tax deferred. But when you actually make the donation, let's say that $100 amount comes off of your income.
Yeah.
For when you file your taxes.
Right.
Okay. So obviously there are tax benefits to charitable donations.
Sure.
Are there limits to this? Can you just give away everything?
Well, generally it's 50% of your adjusted gross income, and there is carryover. So again, you can fulfill it in 1 year. You can carry over up to 5 years against 50% of your AGI in each of those 5 years. Now, I'm just going to put something out there. I mean, I'm reading right now that the fact that there's tax law pending, something may change. It may not change related to the charity, but it may change related to the fact of whether or not this works for you, because the standard deduction may go up. And in fact, I pulled something from Investment News where one person is talking about the fact of front-loading your donation right now. not knowing what the tax laws are going to do in the subsequent years. You can do that with like a pooled income fund or a donor advised fund, where you can essentially front load your charitable donation right now. So there are tactics. I mean, again, if you're interested, I would contact your accountant or financial planner like right now, because we're almost out of time for the year. But there are things that you can do to front load your charitable gifting, assuming that tax laws may not be as favorable in that regard.
Right. So how important is it to keep proper documentation?
Very important.
Right. Right.
Very important. I mean, essentially, once you get to a certain gifting level, you may even need to get an independent appraisal of that gift. So there's a lot that you need to do relative to proper documentation. It's easy if you're writing a check, because then it's your statement, it's a canceled check, it's whatever. Once you start to get gifting over $5,000, there's like a different protocol related to the level of paperwork that you need in that regard. But yeah, you definitely want to keep great records.
Right, and once you get over that certain level, then it does make sense to have advisors, whether on the investment side or on the tax side, to make sure that everything is being done appropriately.
Yeah, if you're going to give money appreciably, and even if you're not, like if you've got charities that are named in your will, that may not be the best strategy. First, for one thing, you're not going to see it happen.
Right.
Okay. For the other thing is that you're going to lose the tax deduction as a sense of that being a testamentary gift. Mm-hmm. So I tell people if they have charities named in their will, redo their wills effectively and take a look at assets that should be given to a charity that are not tax favorable. That might be savings bonds, because then you would avoid the interest income that would pass on to your beneficiary. I wanted this topic to be more strategic gifting, not just gifting. If you're gifting, there's a strategic way to do it and save a lot of taxes, benefit from the fact that you're gifting right now while you're alive rather than when you're deceased through a piece of paper, through your will.
Right, that's good to know,
Yeah.
because I never would have thought twice about that. You just kind of find charities that are near and dear to your heart, thinking you're doing the right thing in the afterlife, but I didn't realize there were strategic ways to do it. So just to wrap up here, as we look forward to 2018, what are some general tips for investors to kick off the year right, to get their financial health out of the gate, ready to go?
The thing that most people don't want to do, they don't want to have a sense of where their money is and what it's doing for them. So they should really develop, almost like almost if they were their own business and they wanted to apply for a commercial loan. They should have a balance sheet. They should know where their assets are and what those assets are doing. If you got a ton of money in a money market, you're well below the rate of inflation. That's not good housekeeping relative to your financial organization. The second part is cash flow analysis. Document where that money's coming and going. Now, software will do that. Quicken will do that. Mint will do that. We use a program called eMoney that's extremely robust. That will do that. But if you don't know where your money's going, you don't know how you can spend it. You don't know whether or not it's frivolous relative to where that's going. So that would be the best tip I can give people. Organize their finances in that regard, and then they have a much clearer sense of where they can go because they know where they are. They don't know where they are.
Right. All right. Well, thank you very much for joining us. Look forward to having you back in January. Happy New Year to you.
Thank you. Happy New Year to
traders,
you.
as always, thank you. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.